Hello everyone. In today's video, I'll guide you through navigating the financial storm of what I call the Great Melt-Up, a phase we entered after the Federal Reserve pivoted to easier monetary policy on September 18, 2024. This move temporarily addresses unsustainable government debt but reignites inflation. Here's how you can protect yourself and your loved ones. Since the pandemic, we've been living in the everything bubble. Even with high interest rates, inflation persisted. Now, with rate cuts and looming quantitative easing, this bubble is expanding into the everything bubble on steroids. The Great Melt-Up will unfold in 2 eras. 1. Pre-crisis era. Now inflation is reaccelerating. This era ends when a manufactured crisis leads to rates dropping to zero and massive money printing. 2. Post-crisis era. Explosive inflation follows, eventually leading to the global loss of faith in the dollar, triggering U.S. hyperinflation, and the demise of the current financial system. But today, let's focus on actionable steps during this pre-crisis era. Inflation is unavoidable. Everything will become more expensive: groceries, housing, healthcare, and more. To protect yourself, you must own appreciating assets. Here's where to start. 1. Become a homeowner. Owning a home shields you from rising rents and benefits from increasing property values. If you plan to stay in one location for over 3 years, buying is usually better than renting. 2. Invest in the stock market. Use retirement or brokerage accounts to invest in index funds or ETFs tracking the S&P 500. This defensive strategy helps your wealth keep pace with inflation. 3. Diversify with gold, silver, or Bitcoin. Gold and silver are inflation hedges. You can hold them physically or through ETFs. Avoid gold mining stocks. They depend on company management. If you're open to it, Bitcoin is another hedge against inflation. Cash is not a long-term solution. While you need cash for emergencies and short-term expenses, excessive cash holdings lose value in this environment. Even earning 4 to 5% interest is insufficient against accelerating inflation. Expect volatility. During the Great Melt-Up, asset prices won't rise in a straight line. Corrections and crashes are buying opportunities. When the government manufactures a crisis, markets will crash, but the recovery will be rapid. Prepare reserves, but don't overdo it. This crash could be years away. Conclusion. To summarize, prioritize buying a home, investing in the stock market, and diversifying with inflation-resistant assets. The goal isn't to get rich quickly but to defend your financial stability. In the next episode, we'll explore what happens after the Great Melt-Up when austerity triggers the ultimate economic collapse. For now, stay focused, stay prepared, and ride this wave up. Thank you for watching. Please subscribe, and I wish you and your family all the best.